Good evening, everybody. Yeah, it's amazing what our medical technology can do nowadays. All right. We're going to do kind of the split session tonight. First, obviously, we're going to start with the J-hook patterns. And the reason for that is very simple. There's benefits to patterns. First of all, we wouldn't recognize them as patterns if the Japanese rice traders hadn't pointed them out to be things that were something you want to take notice of, because usually the results are going to be extremely high probability results. So there's three elements to a pattern. One, it usually puts you in the right position at the right time or the right direction. Two, all boats will rise in a rising tide. So if you're in a slow uptrend, you have a lot of stocks that are going to have a slow uptrend. And what we're looking for, the boats are going to rise a heck of a lot faster than the rest of the boats. So we know that a J-hook pattern has a very strong magnitude of return. And then third, just kind of a side aspect of a J-hook pattern or any of the candlestick patterns is that if you're in an uptrend and things are going well in that pattern, and then all of a sudden the overall market takes a big whipsaw in the other direction, more than likely the pattern is not going to sell off right away or with the same strength. Gives you a little bit more time. Yeah, we're still on the title screen. I'm just babbling here, Harry. Gives you a little bit more time to get out. So we got a group of patterns. The J-hook pattern, and with this group of patterns, I often get people saying, well, which one of these is the best? And the answer is, there's only 6 or 7 of them, and they all work well. But it all depends on what the market conditions are. Right now, the J-hook pattern is working extremely well. Maybe 2 months from now, it might be cradle patterns or fry-pan bottoms. It's what the market is doing at the time. That's right, hydrofoil. So another aspect is when we can recognize a pattern, we can see the exact timing for entering that trade. So if we wake up in the morning, here are the things we're looking for. What is the market direction? The stocks that we're looking at, are they where they're stochastics? Are they already in the overbought area? Are there obvious resistance levels that they're breaking through? And what were the signals or patterns that got us to that breakout area? Again, what was the pattern? So let's take a look at the J-hook pattern. J-hook pattern is very easy to identify. You have a strong price move, then you have consolidation, and then the next strong price move. So there's your little J-hook. Adrian, Heiken Ashy is kind of a vanilla aspect for candlesticks. Ooh, I don't know. Rick or Becky, you might have to type in for RO or RHO to hit the red X at the top and then come back in again. Heiken Ashy is kind of a vanilla way to analyze a trend. And it's the T line is much more effective using candlesticks. Yes, and there is an inverse J-hook or bearish J-hook. So here's what a J-hook looks like. Wave 1, and the prerequisite for a J-hook is a strong price move. And then This is why the bricks and mortar of candlesticks is knowing what each signal represents. So you can see the strength of this move, big candles. You can see the pullback, doji, hammers, dojis, hammers, very indecisive. Now, what's that tell you? That indecision of that pullback is over. Now we're going into wave 3. Now wave 3 has a very compelling element to it. Usually wave 1 and wave 3 are going to be about the same magnitude. So that helps you out quite a bit in the sense that if I can see a J-hook pattern setting up, and this was basically a 4% move, I don't care about a 4% move. But if this was a 38% price move, I can pretty much calculate that's going to be a well worthwhile pattern. Can the J part be longer than a few days? It can. Yes, Carrie. It doesn't matter what it looks like. Usually you want to see it do kind of a J hook. Sometimes they stretch out a little bit, but they still illustrate the same thing, that investor sentiment is building back up, getting ready for the next wave. Okay, our Ho, good to have you back. So there's other elements that we can add. Wave 1, pullback on wave 2 with a buy signal, right smack dab. There's our left-right combo, which is one of your strongest reversal signals, followed by a gap up. Not only can we identify the J-hook, but we can see exactly where everybody else was watching to see what was happening at that time. So if this is wave 1, this is wave 2, and we're buying here, what can we assume about the 200-day moving average? It's probably let's see. If no sound, let me copy that and paste it. All right. So, all right. What can we assume about wave 3? If this is wave 1, that probably they're not going to resist. It's going to go through the 200-day moving average. So where's the place that you buy a J-hook? Well, if we can see this is the J-hook and it's starting to set back up. There was our bullish harami, inverted hammer. Should we ignore J-hooks if no major pattern appear? Alex, I don't understand the question. The J-hook is the pattern. So if you're aggressive, you can be buying here, knowing that at least it's going to come back up to this target. And then you can see whether it fails, or if it goes through, you can be buying here. Now remember our criteria for buying. We want to see a candlestick buy signal in the oversold area. Obviously, a candlestick buy signal in the overbought area doesn't mean very much. If we see a candlestick sell signal in the oversold area, doesn't mean very much. We want to see the candlestick buy signal occurring in the right condition. Now, a pattern breakout has a different element. More than likely, when a pattern breaks out, it's probably already up in the overbought area. Rick, you might have to keep typing in for these people that don't have sound. Like left, right, or best friend combos. Yes, anything that you can see that is the element for the buying, and it can be as simple as a bullish engulfing or a hammer confirmed. It's the signal confirming the next wave to the upside, which you can also apply that to the visual that a pattern is setting up. Yes, the J-hook pattern is setting up right here. a J-hook pattern is confirming the breakout when it comes up through the last little peak. A left-right combo, oh, Chris, you should know this by now. A left-right combo is a bullish engulfing signal after a doji. So you have a doji followed by a bullish engulfing signal. It's a engulfing signal, but the combination of the doji followed by a bullish engulfing signal is called a left-right combo. All right, so what we're doing is we're looking for the breakout levels that confirm what's happening. So if we can see there was a pullback, there was our J-hook pattern. If this is wave 1, what was it kind of telling us about wave 3? That more than likely they could get up through the 200-day moving average. Now, always put the caveat in here. Do we always get big, huge moves like this? Definitely not. But the probabilities of being in the right direction at the right time is greatly enhanced by just analyzing what the signals or patterns are telling you. So here's a case where it came right back to the T-line. Now, for those that are new in here, this is probably as good a chart as any. You've got the red line, which is the 200-day simple moving average. You have the blue line, which is the 50-day simple moving average. Everybody has those on their charts because everybody in the world managing money uses those moving averages to make their decisions about their portfolio. The T-line is the black line. It's the 8 exponential moving average. Now, it has Fibonacci characteristics, which means it acts like a natural support and resistance level of human nature. So this is kind of the most powerful statement you can make about the T-line and candlesticks. If candlesticks are the graphic depiction of investor sentiment, and the T-line is a natural support and resistance level of human nature, you combine those two and you've got an extremely high probability profitable trading strategy. It doesn't really matter where you count wave 1. This could be wave 1 and this is wave 3. This could be wave 1, just where you can see the next or the previous move has started. You buy J-hook the day of the breakout or the day confirming. You can either be buying here, anticipating a breakout, or you could be buying after it's broken out. It depends on how aggressive you want to be. Okay. A best friend, yeah, doji plus a gap up. Remember, the doji is probably the most recognized candlestick signal. So if I was looking at this, look at our little best friend. A kind of a spinning top doji, gap up through the T-line. What can we see setting up? There's our J-hook pattern setting up. I can be buying either on this day or this day, but I want to see what it does when it gets here. When I say I want to see what it does, if it came up here and did a doji and then backed off the next day, then I can tell this was a resistance level or a double top. If it goes through, now I know I've got wave 1, wave 2, going into wave 3. If I see a J-hook pattern breakout, do I just jump in and ignore the sky-high valuation of the stock and ignore the fast stochastic line reverse? Yes, you're buying the pattern. Now, you wouldn't be buying here. You'd probably be buying in here someplace, knowing that it was breaking out. Because what's happening when this breaks out? Other people are seeing that it's breaking out. They're buying up here, adding to your profitability. I'll get to some more that illustrate that. So this is why we can anticipate a trade setup, whether it's bullish or bearish. You see a downtrend. You see it pop back up and failing at the T-line. And then look at our little bearish best friend, a doji gap down. What's that tell us? That bearish best friend signal tells you there's a lot more downside. how much is our downside? Well, if this is wave 1, wave 2, wave 3 is going to be this magnitude. So what do we do here? We can start shorting on weakness. We want to make sure it breaks through this level, and if it breaks through that level, we know we got wave 3. If it kind of supports at this level, we know that's a double bottom. You cover your short position pretty quick. If I see this setup, and look what we've got here. There's a kind of a little kicker signal. Then it did a doji right here, right at the breakout level. Now, what do we know about the doji? We've got the doji rule, which says it's going to move in the direction of how they open after a doji. And if it opens positive, what do we got going on? A doji sandwich, which tells us they've pretty much broken out. So if this opens positive on the next day, wherever this chart was, you'd want to be buying immediately, because the expectation would be that your price move would be that same magnitude, which was good evidence that they were breaking out going into wave 3. So this is what we call 2 plus 2 analysis. When you can add things together and see when your pattern is setting up. And look at this right here. They kind of gapped it down a little bit, broke through that support. That told us this level, or this wave, is going to be the same as this wave. This is not rocket science. I keep trying to demonstrate that this is just 2 plus 2 analysis. That if we can take the pieces of what we know about in the candlestick signals, such as if it opens positive, we've got a doji sandwich heading up the same magnitude. What's that tell us about our J-hook pattern? That you were now going into wave 3 with a high degree of probability that you got a lot more upside. Now, I'm getting ahead of myself, but look at the other things that happened right here. The fact that they couldn't close back below the T-line. So this is one of the most important facets about knowing how long to stay in a trend or when to get back into a position, is if they can't close below the T-line. Remember our T-line rule, that if you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close back below the T-line, with the caveat that the further away you move from the T-line, the higher the probability it's going to come back and test it. So if I was buying right in here after our morning star signal, notice how it used the T-line as support. Now, when I say notice, you're going to find that the T-line works extremely well for maintaining a downtrend and maintaining an uptrend until you start getting too far away from the T-line. Then you see a reversal signal, a good probability it's time to take profits on any bullish confirmation. Too far away from the T-line, what's our doji rule? See a doji in the overbought area, if it opens lower, you close it out immediately. Where do you think the first target would be? If not the 50, back to the T-line. So again, this is why I say this is not rocket science. This is just analyzing what the Japanese rice traders have illustrated to us for hundreds of years of what normally happens in human nature. Do you put a stop just below the T-line at the end of each day? If at the end of that day, yes, I'm up here in the overbought area, moved pretty far away from the T-line, I just put a safety stop the next morning that if it starts trading down there, I want to be out of it. In this case, it looked like it gapped down. It would have hit my stop, or if I'm sitting here watching, I'm saying, let's get out of here, get out of this pretty quick. If there is no candlestick signal, but a close below the T-line, is it still over for the long trade? My strategy at that point is, if it closed just below the T-line without a sell signal, I'll give it one more day. But the criteria at that point is it has to open positive and close back up above the T-line. And I probably have some of those illustrated in here. So the J-hooks have expectations. First of all, that the trend is usually going to continue back up or continue down if you're in a bearish J-hook. Number one. Number two, you know where to buy. There's two places to buy, just as the pattern is starting to set up or when it breaks out through the previous high, telling you that wave 3 is in progress. And wave 1 and wave 3 are usually going to be the same. Now, we can even enhance that analysis with the pattern. And the bobble pattern is merely the J-hook pattern refined. A price comes up and hits a resistance level and fails. Then the price pulls back to something, and normally it's the T-line. At the T-line, it bounces back up and comes back up and retests that resistance level that it resisted at the first time. And then if the price goes through, now your bobble breakout has occurred, which is basically you're producing a bobble or a J-hook pattern breakout. The only difference is we can see where the failure was. We can see where the support was. Now, a bobble breakout has a little bit more additional enhancement to it because we can see that it's supported back here at the T-line after failing at the 200. Nobody has the T-line on their chart. It's just one of the indicators that we've applied years ago because of its effectiveness as a support and resistance level of candlestick signals. But everybody has the 200 on their chart. So we can see that it's setting up for a J-hook or a bobble breakout. And the only difference between a bobble breakout and a J-hook is that if we took this 200 off of here, we'd still have a J-hook pattern. We can now see that it's going to be a little bit more enhanced because what do you think everybody and their brother is looking at as far as whether it's going to get through a resistance level? They're all watching to see if it's going to come back up through the 200. So if we closed out here, we can be buying immediately as soon as we see it break out because we know the probabilities right now is wave 1 and wave 3 are going to be the same magnitude. Now that's because we've got the advanced alert of this J-hook pattern setting up because of the support of the T-line. Most technical trading programs say, up, we can buy here, or we can buy here, or we can buy here, because it's confirming what their parameters are. But what it's basically doing is just adding to the profitability of us knowing we could buy immediately, knowing what the result of that pattern would be. So there's your bobble breakout. Remember what happens when they gap up in an overbought condition and just touch a resistance level? That's where you go to your 10-minute chart. And if it closed here and then opened lower, you're closing it out. Now you're just waiting to see what it does back here at the T-line. The support is the T-line, but you're buying based upon a signal. Look at the bullish Harami. What's the bullish Harami tell us as soon as they hit this support level? Told us the selling had stopped. We could be buying here, or we could be buying here, whatever your risk tolerance is. For your stop, do you do market or limit? I usually do a stop, which is different than a limit, which says if it comes up through $20.40, it kicks in to be a market order. If you put in a limit order and say, I want to buy if it comes up through 2040 and it trades at 2039 and the next trade is at 2042, well, they're not going to be able to execute you at 2040. It's going to go on without you. I want to buy if it hits that level because that tells me the direction that it's going. Did you say the more aggressive trade buy on the day right after the? Yeah. If I was looking at this and I wanted to be aggressive, I'd be buying on this day. anticipating the J-hook pattern. But then when it got back up here, I have to see it go through. If it fails here, I'll come back out. So hopefully I've made a little bit of money or broke even. Or I can be more conservative and say, all right, if it comes back up through, I want to be buying if it comes up through the 200-day moving average. So this is what we're looking for. A failure at a resistance level that everybody else can see. Always use stop. Yeah, a stop order is as soon as it hits your limit, it turns into a market order, so you're buying immediately. If you do a stop limit, says if it hits 2040, buy me at 2040. Well, if they can't buy you at 2040 after it goes through, it might go straight on up and you're not in because they couldn't buy you any stock at 2040. It already passed that level. I want to do my very first trade for real money. Is Thinkorswim back to normal? I guess it is. I didn't know it wasn't. Oh, okay. Sorry, Mark. One could buy half and then add another half. Yeah, you could do that. If you wanted to be a little bit, you could buy a half a position here and then wait to see if it breaks out and buy the other half. A joke, or Jake, that's why you're here, is to be enlightened. So here didn't really back off. I wouldn't have bought on that day because that was the day it told us it went through, but I'd be buying on that day. That's telling you the, again, you can see how it supported at the T line, it resisted at the 200 and then broke out through the 200. What's my expectation? Wave 1, wave 3. All right, so because nobody has the T line, Ali, it will work on your candlestick signals. The definition of a candlestick signal is it is the graphic depiction of everybody buying and selling during a specific time frame. So the chart patterns look just the same on a 1-minute chart as they do a monthly chart or anything in between. So you don't buy until the confirmation day after the breakout. Depends on whether you're buying here or you want to buy up here after it's broken out. Do you have scans for the J-hook and the Bobble? Yes. I'm pretty sure in there in the members area where you can copy and paste them. Carrie, we've got a lot of people that on Thursday nights, if I'm not speaking, we usually have guest speakers, or I go to other groups, and the T line is nothing more than we couldn't figure out whether to call it the trigger line or I forget all the other names. So we just called it the T line for short. And it was introduced by one of my first private training students, Rick Sadler, who loved candlesticks. And he came down from Anchorage, Alaska, and we sat in front of my computer and I gave him a private training session for a weekend. And he loved candlesticks, but he wasn't grasping it. But then about 6 or 8 weeks later, he called me and said, hey, put the 8 exponential moving average on your chart. Now, the nice thing about candlestick analysis is what works a high degree of the time, high probability of the time, is the signals themselves. Then anything else that you can add to your chart that will enhance the probabilities, you can put it on there. And as you can see, my charts aren't very cluttered. You've got the 50, the 200, This is probably the 34 EMA, which works reasonably well. The 8 exponential moving average, the T line, and then what we call the 3T line, which is the 3 exponential, which works in conjunction with the T line. So anyways, Rick called me up about 8 weeks later and said, put that on. Now, you're always going to have somebody say, hey, you ought to try such and such. Well, if you put it on your chart and it helps you, keep it there. If it doesn't, take it back off. Because again, the #1 criteria for candlestick analysis is the signal itself. Everything else is just a confirming indicator. Which broker has most of these stocks and indexes? Which broker? I don't know what they all should have. I mean, this is nothing. Metastock has all our formulas that we put on there. Jeff Gibby and I worked years back formulating everything so that you can use Metastock to identify the patterns or scan for the patterns. I'll make sure I'm reading everything as we go along here. So I had a stock that closed below the T line yesterday. Then it opened lower and went down, so I sold it. Ended the day way up as a bullish engulfing. Very frustrating. You can't do anything to prevent that. There's a very simple rule, and I'll get to that, Jake, that if you see a sell signal and a close below the T line, there's 2 parameters. One, if it's been a steady uptrend for a while, and I'll get to one of those later, and it finally closes below the T line, it better open positive and trade positive the next day to stay in it. Or, if you close it out, remember, the probabilities go dramatically against you if you see a candlestick sell signal and it closed below the T line. That is showing you there's a change of investor sentiment. Now, you can have a candlestick sell signal, but if it doesn't close below the T line, you don't have the confirmation that there's been a major change of investor sentiment. Yeah, Metastock is a scanning software, not a broker. Now, you do have brokers that have charting on their, I think all of them have charting on their service. The problem is they're in the business to make trades. So the charting aspect is just a complementary service. So their scanning capabilities probably aren't great. My suggestion is you either use Metastock or TC2000. You're better off spending an extra $40 or $50 a month for those services than trying to scan on something that isn't set up to be a good scanning software. $50 or so a month is going to save you a heck of a lot of time doing the correct scans. Yes, and Jake and I'll get to that. Let me, Jake, I'll remember that question, because that's a question a lot of people ask, is I got stopped out and it came back up. Do I get back in? And the question should be, is this the best place to put my money right now? If I got stopped out, should I get back in, or should I go look at a chart that has much better probabilities to it? Jake, Thinkorswim, yeah, it's not a very friendly. Our scans are over there on Thinkorswim, but it's not as friendly. You got to really kind of work at it to get used to it. Jake, when we get to the live charts, we'll look at that. So we're still on the. All right, so if we see a J-hook pattern and it pulls back to the T line tells us, that's a good time to be buying, because we have the T line on our chart and we can see that that's acting as a support level. Nobody else does. So that's a good setup. So anytime I see a J-hook pattern, look how far away we got from the T-line. Look at your bearish Harami doji. That was the time to take profits. But then look what happened when it came back down to the T-line. There was your inverted hammer, bullish confirmation. You could start buying because you could see that it was supporting on the T-line, and we're getting ready for wave 3. Now when it got up here, had it done this day, and then the next day it closed down here, what would that tell you about this level? It was acting as a resistance level versus a breakout level. The fact that they did break out told you, no, we're now in wave 3, you can stay long. So when you see it pull back to the T-line, that's good. If you see it pull back to a level that everybody is watching, like the T-line and the 200, that's even gooder. Because where do you think everybody is watching? Now, this is a normal price move of human nature. Wave 1, and then they got to the resistance level. What happens when they go through a resistance level? Well, you can see there was profit taking. Because what were they going to do? They were coming back to see if the resistance level was now going to act as support. We could see immediately it was acting as support with a bullish engulfing signal. And then we can start buying here, because what happens if you're not trading candlestick charts? What are most people watching? Moving averages, support and resistance levels. So if they see that it's supporting here on the 200, and we can see it's doing it with a bullish engulfing, and then we start buying here, it's because we can see there's a J-hook pattern setting up that's supported on the support level. On Oxy J-hook, is that price where wave 1 started? Well, no, you just kind of count this as wave 1. Now, it doesn't have to be exact. We just kind of figure the magnitude of wave 1 is going to be the same magnitude as wave 3. And I think this is, yeah, this is today's trading. So where do I expect this to go? Well, if this is wave 1, wave 3 should bring you up in this area someplace. So if we can see what everybody else is watching, or everybody else is watching to see if it's going to act as support, we've got the visual advantage to see, yeah, they're buying here. They did a bullish engulfing. Get ready to buy because that looks like a J-hook pattern setting up. So we were in early. Now there's 2 advantages to being in early. Obviously, one, you're in a, if it's a good trend, you're in early, higher profitability. If this fizzles, you don't have very much for a stop loss. Probably you would put your stop at the halfway point of the bullish engulfing signal, because the logic of candlestick analysis is if that's a buy signal and the bears are able to knock it back down below the halfway point of that candle, the bears are still in control, close it right back out. That's just kind of common sense, and that's the whole element or basic element of candlestick analysis. Everything you see on a candlestick chart is just common sense put into a graphic depiction. Could this be a cup and handle? Not really. This I would call more of what we call the classic pattern, where you've got a big fry pan bottom, and what's a prerequisite for a J-hook pattern? A strong price move. What's the result of a fry pan bottom? A strong price move. So the classic pattern is usually a fry pan bottom, strong price move, consolidation, and then the J-hook pattern continuing. It's way carved from the T-line today. Yes, but it's still wave 1, wave 2, wave 3. So that might tell us, yeah, if we start getting up here in the next day or so, same magnitude, you start being a little bit more diligent as far as watching for profit-taking signals. There was a small J-hook before the highlight. Oh, right in here? Yes. Or a sell signal, but not a close below the T-line. So even if you've missed this move, What do we know about a J-hook pattern? That this wave right here will be the same magnitude as this one. So if we can see a J-hook pattern setting up here, we at least can calculate how big that one, the next wave will be. Does Stephen, I don't know what that word is, Chris? Is a candlestick analysis effective on a 24? Yes. You just won't have gaps or that type of thing, but you'll get most of the signals. Does the difference between stocks and currencies is that they don't have gaps? Correct. But they work the exact same way. Remember, the definition of a candlestick analysis is it's a graphic depiction of everybody buying and selling during a specific time frame. Doesn't matter whether it's stocks, bonds, currencies, commodities, tulip bulbs, anything that has fear and greed in it. So, as I said, when it comes up through a resistance level and they pull back, they're pulling back to a level to see if that resistance level is now going to act as support. We can see immediately it's acting as support. What's everybody else watching? To see if it's going to start moving away, and now they're confident that that acted as support. They're still buying up here, adding to our profitability. And then even gooder, more gooder, is if they see that it resisted at a resistance level, pulled back, we can see it supported at the T-line, that when everybody sees that it's broken through that resistance level, they're buying. We're buying early, knowing exactly what should be does Stephen intent on retaking this course later? Chris, you still have me baffled. Intent to retaking this course later. Boy, Chris, I don't know what that means. So this is an extremely high probability trade. Now, as I have, one of our training is the top ranked signals and patterns. So you've got the 12 major signals. They've been already broken down from the 50 or 60 candlestick signals in the candlestick universe. The 12 are the only ones you need to learn. The others don't occur often enough to spend mental time and energy trying to learn them. If you just learn the 12 major signals, you will have more trades, and you will have the most powerful trades that happen in reversals. Then you've got 6 or 8 patterns that work extremely well. Then we have what we call the top ranked signals and patterns. That's the combination of the signals and patterns, like a doji followed by a gap up, your best friend. So we rank them, not that number 1, which I put as the best friend signal, is any better than number 18, which I can't remember what that is. They're all good. But a lot of people say, well, man, when you go through scanning at night and you find 20 or 30 good charts, how do you narrow it down to the best 1 or 2? That's where everybody should not be depending on somebody else. If you learn 3 or 4 of the candlestick signals and patterns and become an expert at them, and it doesn't take very long to do that, now you're never going to be at the mercy of all the verbal rhetoric that you hear on the financial news stations, somebody's recommendation, news items that come out. You can control your own investing by knowing exactly what each signal and pattern is supposed to do, when to get in, when to stay in, and when to get out. Now you're controlling your own investing. Oh, is he asking whether this, yeah, this is being recorded. Okay. Does Steven intend to retaking this course later? If you're asking if this is being recorded, yes, it's being recorded. Is the small green candle where the blue arrow is smaller enough to call the 3-day candles a doji sandwich? On this one, that's a doji sandwich. That's not quite a doji sandwich, but it's, I mean, you got your stochastics coming up and you can see it's right here. And then when it opens positive, what's that tell you about the 200? It's not acting as a resistance anymore. In a bobble breakout, necessary to follow the trend to have a better probabilities. Yes. Or bobble breakout is going to be part of that trend, yes. And you don't want to see the market heading down hard, because that's going to influence. It's when the market is either trading flat or just slightly positive or positive that the patterns are going to work more effectively. That's even all the way down to trading flat. That's the advantage we have with candlestick scanning, is we can see which sectors are acting the strongest. In a bobble breakout or necessarily a main trend, better probably, or can I use counter trend? You don't want to use the counter trend. You want to, just simple logic says if the market's in an uptrend, your better trades are going to be the uptrending stocks. That doesn't mean there won't be good short positions, but right now, as you've seen in my morning comments in the members area, if you're a member, I've been telling people, be predominantly long, but have a few short positions in the portfolio. So your short positions are still going to make you money, even in an upward trending market. And it will also protect you that if there's all of a sudden a big downturn in the market, those are going to produce good profits while you're coming out of some of the long positions. So if you see a candlestick buy signal and it's near one of the major moving averages, but it's not in an oversold area based on stochastics, would you still enter a trade? Yes, remember, you're buying the signals in the oversold area. You're buying your pattern breakouts usually when your stochastics are in the overbought area. If a particular sector is showing a J-hook pattern and several of the individual stocks are showing very similar patterns, you spend more time trying to figure out which one is the best. Well, you got two things to assume. One, and what you're seeing right now is a lot of J-hook and bobble breakouts. These are all oil-related stocks. What's the assumption? They're buying the oil sector. So if I've got 10 positions on, maybe I have 2 or 3 of my positions in the oil sector. And then if I see that there's another sector, like the electric vehicle sector or the lithium mining sector, I might have 2 or 3 positions in that sector. And then the other 4 positions might be just other stocks that are working very well. What's your purpose for using the 3 EMA? It acts like a little benefit that if you see a candlestick buy signal and a close above the T line on your the candlestick signal, that if the 3T comes up, that's a little bit more confirmation. Or if you're moving too far away from the T line, now the 3T line becomes more effective as far as getting ready to take profits. Are you concerned this closing on the upper Bollinger Band? No. Bollinger Band is just a another indicator. Now, is it moving a little bit further away from the T line? Yeah. So that makes me a little bit more cautious, especially in the overbought area, to start watching for maybe a reversal signal. Or let's say tomorrow we wake up and they gap this up. Now I'm getting ready to take profits, because one of the basic philosophies of the Japanese race traders is, where do most people buy? they buy exuberantly at the top. So if this gapped up that far away from the T line, I'm more apt to start taking profits, which we'll get to here in a little bit. These signals work same way in any time frame, yes. From a 1 minute, 1 hour, 10-minute, daily, weekly, monthly. My stochastics are 1233 slow stochastics. And again, we're not buying or selling stochastics. We're just seeing where the trend is occurring or where the signal is occurring. The Japanese rights traders, again, use very simple logic. If you see a candlestick buy signal in the oversold area, more than likely there's been a reversal. So, again, a bobble breakout is more gooder because everybody is watching to see what's happening at that breakout level. We have an added benefit is nobody has the T-line on their chart, and we can see that it's supporting on the T-line. So a bobble breakout has expectations. We recommended ECPG. Have no idea what ECPG does. But when it did this bobble breakout, we were buying because we knew the probabilities of it heading higher, and today it had another good day. So remember, patterns have advantages. They're a buildup of investor sentiment. They're going to put you in the right direction in the right at the right time, and the magnitude of the returns are going to be much better than just merely uptrending stocks in an uptrending market. And then the third little added benefit is that if the market all of a sudden turns, a pattern will usually take a little bit longer to start selling off. Gives you a little bit more time to get out before it starts selling off hard. We also want to know what the market trend direction is. Obviously, a good bullish chart is going to work much better in an uptrending market or even a flat market. Cheryl, no. I don't usually do anything pre-market because where is everybody making their decisions, or the people that have the big money? After the market opens. If you've got 14 million shares trading in Apple, that probably pre-market or after market, from the time it closes to the time it opens the next day, there might be only 20,000 shares traded. That's not indicative of what everybody's doing. Do you close most of your trades in a day? No, I'm a swing trader, so most of my trades usually last anywhere from 2 to 10 trading days. Why is the J-hook pattern the best pattern in the current market? Have no idea. All we know is that the J-hook pattern is the best pattern in the market. Maybe next month it will be fry pan bottom breakouts, or best friend signals, or kicker signals. Alan, most of my trades are probably done if I'm buying or selling, probably within the first 45 minutes of the day. And that's a whole nother logical entry and exit strategy session on what the market's doing on the open and what your stock is doing on the open. Probably 15% of my trades are being closed out within the last 15 minutes of the day, which means there's about 5% of the trades are done during the middle part of the day, and that might be something where there's an extremely big move going on one way or the other. Can you show the slide of the list of strategies that you showed at the beginning? I will have to zoom back up there. How do you scan for these patterns? Very simple scans, and I'm not actually scanning for the patterns. I'm more scanning for the signals. And then we can identify whether there's a pattern setting up from seeing what's happened previously. So we're not necessarily scanning for a J-hook pattern. We're finding it because of the individual signals that are showing up. There's your who somebody was, yeah, there's the different patterns. And then there's the 12 major signals. I don't have them on here. What specific signals? George, that's your 12 major signals. That's what you should be learning right from the get-go. Yeah, the first thing about candlestick analysis is you want to learn the 12 major signals. And those are either on our website that you could look at, or I've written 3 books on candlesticks. With the one with the most meat in it is High Profit Candlestick Patterns. That will show you which the 12 major signals and which patterns work the best. Do you close most of your trades in the first 90 minutes of the day, or I'm usually buying? Now, I'm usually buying that if I'm getting ready to buy and it looks like the market's opening up correctly, I'm going to be buying probably within the first 45 minutes. Sometimes I'm probably buying within the first 90 seconds. And, oh yeah, we've got a special going on the, yeah, the holiday special. Now I forgot what I was talking about. That's just great. Usually I can start a sentence and can't even remember how I was going to finish the sentence. Okay, so let's take a look at some live charts. So here's what we want to do. Let's see. Well, I'm already way over time. But we've got a bunch of good stuff here. I'm going to show you a lot of the reasons that we recommended our positions. I usually recommend 3 per day, but I only recommend them when we do it on like a 2-minute video saying, all right, today the Dow looked iffy, but it traded right here on the T line. So I'll go into what the market indexes are doing. Now, the market indexes, you can see what happened today. The Dow traded lower, but it still closed right at the T line. What's that tell us about the direction? Still kind of iffy. It's been iffy now for this whole time frame. The NASDAQ, this is where you saw a change of investor sentiment. Stayed above the T line, stayed above the 3T line. Here's another element for using the 3T line. If it's staying above the 3T line, that means it's still staying well above the T line itself. And what do we see here? Yesterday we saw a bearish engulfing signal and a close below the T line. Now remember, we've had a steady uptrend now for over a month, maybe even longer than that. So what do we do with this? We got to see it's going to confirm. Now, had this opened here and traded lower, we would have closed out a lot of positions, but you see what happened. They gapped it down, and then you could see, just based on the color of the candlestick formation, the buyers were stepping right back in. And it closed back up above the T line. Doesn't tell us we're out of the woods. It's just telling us right now we still want to see what they do tomorrow. If they open up positive, it just tells us there was profit taking and they were still in an uptrend. If they open it lower and take it down, that tells us there's probably going to be some more selling. So, Jennifer, I put out 2 or 3 stock picks a day. The 3T line is the 3 exponential moving average. Now you can see what's happened here. We haven't closed on the 3T line below the T line. So that doesn't give us a real powerful sell at this point. So when I put out 2 or 3 stock picks every day, it's not so people have stock picks. It's more to continue the education process of why we're buying those signals. Now we recommended 3 picks today. No, actually 6, because we didn't know which way the market was going, so we recommended a couple, 2 longs and 3 shorts. We recommended HC or ACHC. You could see this little kind of J-hook pattern setup. There was your bullish engulfing signal, bullish confirmation, breaking out. What do we expect going on right now? Wave 1, wave 3. We also recommended this one, but it opened lower. That's not what we want to see if we're in a bullish uptrend. But it came back up, and it still has a J-hook pattern prospect. So even if we didn't buy it today, it doesn't mean this is out of the picture. If they start trading this one positive, especially up through this level, that means our J-hook pattern is still in progress. We also had a few that we were recommending to go short, except they opened and started trading positive. Now, this is the reason we recommended going short on this one if it had traded lower. I will usually say you want to short this if it trades down through, I forget what figure I used, 56.90. And it opened at 56.70, but immediately started trading positive. Now, the reason we recommended this one is this is what we call blue ice failure, named by my late friend Dave Elliott of Wall Street Teachers, where they've fallen down through the ice, they come up and try to find the hole they fell through, and they can't find it, so they drowned. So they go to the bottom of the pond. So the next likely target is all the way down here, or at least here. That's on bearish confirmation. Now, we had that same scenario over here, but you can see we started seeing buy signals as soon as it got back to the T line. So if we had shorted here, we'd covered our shorts over here. Okay, so here's the reason we've been buying. And somebody asked, why is the J-hook pattern working in this market? I have no idea. But we started buying this one because of wave 1, wave 2, and look at our hammer at the T-line gap up, inverted hammer, bullish confirmation. We were buying right here because it was breaking out through this level. What do we expect from this? Wave 1, wave 3 could be another 3-4 points to the upside. I'll try to go through these real quick, but these are the reasons we were recommending these is because look at your big move, pull back right to the T-line area, kind of a double doji sandwich. Blink is still in an uptrend. We've been buying the oils. Apache, because it's supported right here, J-hook pattern. Occidental, a bullish engulfing right at the 200, wave 3 in progress. AROC, we bought a while ago because there was a morning star, not a morning star, but a bullish flutter kicker, another strong bullish signal, J-hook pattern. So we're holding on to that one. We bought Whiting a while ago because it had a little J-hook pattern. Didn't look good today, so now we have a very simple strategy. This opens lower tomorrow, you close out the position because of the doji rule. These are the type you want to get stuck in. This is what we call a steady eddy. This is a bullish doji sandwich. A big candle, a doji, opens positive next day. Look at the magnitude of that candle, the same as this, with the doji sandwich in between, implies there's more upside. So how long do you hold on to this one? Until you see a sell signal and a close below the T-line. What's it look like it's doing right now? Had a couple or a few days of consolidation, doji type days. Looks like another J-hook pattern setting up, so we'll continue to hold this. So the reason I keep saying this is not rocket science, this is very simple trading strategies based upon the visuals. Notice when Billy pulled back, couldn't close it below the T-line. There was your J-hook pattern. So essentially, I've discovered through the years, because I was even a stockbroker for 8 years, well before candlesticks came along, that most people have good positions in the uptrending market and they have a few bad ones. And what do they do with the bad ones? They're waiting for them to turn around and head back up. With candlesticks, it tells you which ones aren't working so you can move out of them and move into the good ones. We recommended because of this. Look at your fry pan bottom. This is what we expect coming out of a fry pan bottom. I think we have a few people that got into edit. Look at the fry pan bottom. Oh, somebody said they got out at 61 today with a big profit. But this is essentially what we're looking for. Is what human nature normally does. You buy the signals when they're in the oversold area. You buy the breakouts usually when they're in the overbought area. So on a ocular at the last few days as consolidation, would it be better to take profits and find a trade with higher probabilities? That's up to you. But remember, this is why I say learn the signals. What does a doji represent? Indecision. So indecision. What's that tell you about the strength of the selling? Not very strong. It's indecisive. And what was our other element? There was never any reason to close this one out because it never closed below the T-line. The T-line rule is what keeps people, or at least kept myself. I was making good money, and I say good money. Before candlesticks came along, I was the worst investor in the world. I did everything ass backwards. And when candlesticks came along, I could say to myself, well, if I'm selling at the bottom, because I would always ask myself, how come as soon as I sell, the thing turns right around and heads back up? Or as soon as I decide to buy, it turns right around and goes back down. That's because that's normal human nature. All I had to do was turn that decision-making process around 180 degrees. And I said, well, if this is the time to buy, doesn't look good, but somebody's buying in here. And what turns out is that's where the smart money's buying. So if I can see a pattern setup, Simu, we bought this one because look at our best friend Breakout. Got some good profits, pulling back, but it's not very decisive. We're looking for the next, for the J-hook pattern. Do you have profit targets or just go by reading the candlesticks? Roderick, you go by reading the candlesticks. A lot of people will say you can never go broke taking a profit. You can go broke taking a profit because the whole point of investing is you're trying to find the trades that are going to help you maximize your return for your account. A lot of people will say, shoot, and this was me, I've got a profit, which before candlesticks came along, that was a hard thing for me to do. But what are we afraid of when we have a profit? We're afraid to have it go back and turn into a loss because, boy, would we look stupid if we had a profit and then we let it turn into a loss. So in an uptrend, I'll pick one out. Finally have a profit. And say, I'm going to take a profit because I have a profit. Well, that has nothing to do with what that trend is doing. So I've finally learned that as long as the trend is still moving in the right direction, you take a profit. If you're buying based upon a candlestick buy signal, you sell based upon a candlestick sell signal. Heikin-Ashi bars are 2 days smoothing the price. Heikin-Ashi, again, Andrew, is a vanilla method, and it's probably more for the long-term investor. And you could change this if you want to. You could make this into oops. On some of them, you can change them to 2-day. I can't remember which ones. But here's a very simple method for dramatically improving your, instead of using Heikin-Ashi, use the candlestick signals and the T-line. I was saying before, I was making good money. I was finally making a profit instead of consistently handing money to the markets each month. But then when the candlestick or the T-line came along, my profitability improved dramatically. So very simple logic. If you see a candlestick buy signal and it closes above the T-line, you can stay long as it stays above the T-line. Use Heikin-Ashi. Yeah, if it's working for you, use it. I helped write some of the formulas for Heikin-Ashi for some investors in Texas years ago, but it was still more for the longer term hold because it was kind of smooths things out. It was a vanilla, more of a vanilla type trading technique. All right, so BNX, we're still long. There's kind of your gap up, and it's staying above the T-line. I've got a bunch of these. I'm going to go through them real quick just to show you why we're in them. If I can do this correctly. Look at your slow curve breakout. Look at your J-hook pattern with a left-right combo. This is Capri telling us there's still more upside. BNTX, did it move up after hours? Not necessarily. So this is one of the places where you look at it and say, would you be buying here? And the answer is no, you'd be holding this one. You want to be buying where the buying occurs. So every single day somebody will ask, could I be buying up here? And the answer is no, you should be looking to see where you should have been buying. The T-line is the 8 exponential moving average, the EMA. And it's, Harry, yes, at this point, you'd be buying a stock that's already moved up 100%. You're in the overbought area. So why would you be buying here? Because you're hoping that it goes up further. What you should be doing on this analysis is saying, man, this is up pretty high. It's already had a big move. What started this move? What should I be looking for to start into a trend or start buying? That's doing what the normal human nature does, is buying because it's already had a nice move. So, man, I'm hoping there's more. I go the other way. I say, well, let's go back and find something that looks more like this. Oh, okay, they got approved. Now remember, on something like this, you got to be careful because you buy on rumor, you sell on news. SYRS, another one that gapped up because of the best friend signal. That's one of the signals that I use quite a bit. I think so. Well, no, there was your slow curve scoop type pattern. Now that's a whole different study. What do you do on something like this? You want to see it open positive and you're hoping for a 45 degree off of there. And DraftKings, we just started buying because look where the buy signal occurred. A bullish engulfing right off the 50 after coming up through the 50. You still want to be buying this because it looks like that's starting another J-hook pattern. What's your first likely target everybody might be looking at? There's a little gap right here. At least that would put you in the right direction. We have been in IGT. because of the J-hook pattern, gap up, wave 1, wave 3 in progress. AVRO, when do you take profits? Well, there was your bearish best friend, gap down, telling you there's a lot of force to the downside. When do you start taking profits on your short position? When you're in the oversold area, you had a couple of hammer signals, it opened positive today, we closed out the short position. Why? Because the probabilities are starting to go against us that that was the area that the buying is coming in. Not yeah, a little tweezer bottom also. All right, we usually wait to do individual ones. Nothing wildly exciting on this one. You do have a bullish engulfing, but you're still sideways. You can buy on positive trading, but you definitely need confirmation or confirmation. Hold on to your individual one. I've got about 15 more, and then I'll take some individuals. You can see the fry pan bottom breakout. This is what we call convergence analysis, or 2 plus 2. Fry pan bottom, double bottom, supported on the 50, double doji breakout, uptrend. How long do we hold this uptrend? As long as it doesn't close below the T line. If you see a breakout signal but no volume, do you buy? Yes. We're not buying volume, we're buying price. So a lot of people say, I want to see volume go up as the price goes up. If nobody's willing to sell stock as that price is going up, it's going to go up on low volume. Now, there is a time when you can use volume. I'll see if I can find one as an example. You usually do the biggies, but there's not good-looking stocks in the biggies except look at Tesla. Tesla couldn't close below the T-line. The uptrend is in progress. And Amazon, you can see the wedge, and it's broken down in this direction. So if this opens lower, what do we got going on? We've got a bearish doji sandwich telling you they're probably still heading this one down further. ADS, traded below the T-line. Now, it had an up day today where it opened here and traded back up, but that's not a reversal signal. Look at your stochastics. They're still heading down. This is what they call an in-neck signal, which means if this opens lower tomorrow, you still want to short, it can be shorted because there's still a little gap right here, then likely targets here and here. Jake, some people want to short Amazon. If the question is Amazon so strong it can't possibly go down, the one thing I've learned is you let the chart tell you what's actually happening, not what you think everybody else thinks is happening. And overstock was another one that you could observe the obvious. Look what happened right here at the 50. You're in a downtrend. You had some buy signals, and what happened when it got to the resistance level? You had a strong sell signal. How long do you hold this one? You stay short until you see a buy signal and a close above the T-line. Where's the likely target? Probably at least testing the low or coming down here, which probably makes your 200-day moving average the viable target. And ACLS was another one that we had been long, but where was our safety stop? If you're that far away from the T-line in an overbought condition, and you see doji, very simple. You put your stop just below the lows of the doji, because logic says if it comes in that direction, where do you think your first target's going to be? Probably back here. You want to be out of that position. Now you've got an evening star signal and a close below the T-line. you could be shorting this one. All right, I don't have too much more. We did SBE. No. Here's the one thing that a lot of people have trouble with, and I always had trouble with. You see a good chart. There's a reversal. It starts up, and then it closes back below the T-line. It should be closed out. But what do we have as far as ego problems? Man, this looked good. I thought it was heading up. It's hard to close out a trade. But through the years, I've discovered if you have a chart that doesn't look good, close it out. And the thing that finally made me realize that if I have a bad trade, close it out quickly, because statistically, I've discovered that I'm going to make a positive trade on probably 70% of my trades. Now, some of them may only be 0.3%. Some might be 300%. But that's a pretty good percentage. But the thing you have to remember is 30% of your trades are probably not going to work. And until I got that in my mind or in my head, I took a losing trade personally. When I finally realized that, wait a minute, 30% of my trades aren't going to work. It's nothing about the analysis. It's nothing about your mental capabilities. It's just the probabilities are on candlestick signals or any trading program, they're not all going to work. So when I see something not working, I close it out quickly. That's that process for cutting your losses short and letting your profits run. What every major advisor tells you to do, but they never tell you how to cut your losses short and let your profits run. Candlestick signals make that very easy, when to close out a trade and move on to something that has better probabilities. Chris, we're still going to wait until I tell Rick to do the double line, then I'll take individual ones. And Jamay, this one, yes, we still have, because look at your J-hook pattern setting up. So you could still buy this one on positive trading. I think that's about, what is this one? AKLS. Kicker signal. What do we expect from a kicker signal? More upside. So if you see this open positive, expect a 45-degree. And Monera, you could stay long on this ever since that little breakout. Look at your fry pan bottom J-hook pattern. Then your profit taking. Where do you take profits? Look what happened when they gapped it up here. Look how far away you were from the T-line. So there's two things you want to do. If you see it gap up that big and start trading off, I usually close out half the position immediately. Then I put my safety stop at this level. If they've got enough selling juice to come down through that level, you want to be out of that trade. So everything that you do as far as buying or taking profits is just mere common sense elements put in or using the graphics. You use other indicators other than stochastics. George, you can use whatever you want to. If you add something to the chart that improves your probabilities, go ahead and use it. If it doesn't work, take it back off. I use everything. I might put Fibonacci retracement numbers on. I don't use Fibonacci retracements to make my decisions of buying and selling. I use Fibonacci's to see if it starts selling off, where there might be support, or trend lines. Anything I know everybody else is doing. Remember, my main criteria is using the signals and the patterns, and then seeing what those signals and patterns are doing at technical levels that everybody else would be watching. What percentage or what do you use to determine you are too far away from the T-line? Just visual. Just the fact that you can see it's close, but now up here, you're that far away. And you're up here in the overbought area. So it's not a percentage. It's just that you can see, man, that's moved a lot, or a good distance away from the T line in the overbought area. I should be much more prepared now to take profits. On ALKS, well, yeah, but that's a kicker signal. That means the force is going this way. Remember, we're buying the signal. We're not buying the T line. The kicker signal is one of your strongest reversal signals and implies there's going to be more upside. More than likely, it will move up, but your stochastic will start moving up pretty quick because of the magnitude of the move. Okay, and space. There was your J-hook pattern. There was your left-right combo. Came back down to the T-line, bounced back up. What's our assumption? The uptrend is still in progress. Okay, is there any general questions on candlesticks? Oh, this Saturday, Metastock is doing a full day training session with multiple speakers. I'm going to be on at 10 in the morning. They usually like to put me first because candlesticks is kind of like the bricks and mortar. But if you have candlesticks charts up and you can see what's going on in candlestick charts, that makes everybody else's trading strategy that much more clear. There's the link. Becky just put on the link. So these are usually very informative sessions because you might listen to 6 or 8 speakers. You're not going to be interested in all of them, but you might find 1 or 2 that you like their concepts, and maybe if you combine a couple of their people's concepts, come up with a trading strategy on your own that's a heck of a lot better. I use Metastock now. I use mostly TC2000 because it's quick for me. But if I'm looking for specific stuff, the nice thing about Metastock is it's got so much good information on their charts that if I want to experiment with something new, I use them. If I want to trade Asian stocks or Canadian stocks or European stocks, they've got the feeds for all of it. If I want to trade currencies, they've got everything. Whereas TC2000 is just restricted to U.S. stocks. Have you ever worked with Warden? And yeah, I use TC2000. I started, Dave Elliott and myself, when TC2000 first came out, we would travel around the country and give demonstrations on how to use their software. For the earlier mention on TGTX, given kicker today, massive up 40%, would you buy tomorrow on positive trading? And where would you put your safety stop? On this type of chart, kind of a gap up, was it TGTX? What was the one? Oh, was it ALKS? I want to see it trade positive. I probably would put a stop at the halfway point of that candle. But you can see the little slow curve and the breakout. That means there's a new dynamic in that stock. Okay, I guess with that, Jim or Rick, you want to do the double line? And then in 3.6 seconds, do the next double line. Oh, the back. Oh, I don't know why you would even look at the weekly. You still want to see what's happening right here. I never usually look at the weekly. And WRR, we're not in it right now. It has to come back up above the T line to get back moving. So you shouldn't be in it at this point. Advanced micro, that's not a real good looking chart. Not even where now, or it's just not a very great chart. If you're in it right now, it has to open positive. If it opens lower tomorrow, you want to be out of it. Now, F-SLY, that's a much better chart. That one's got what we call a stick sandwich. And the stick sandwich has occurred after it's broken out. So you can buy this one on positive trading with the expectation it's going to come up and fill that gap. Twitter. Oh, I missed a few. Twitter, big bullish engulfing. Want to expect a 45-degree off of there. CSLK, you stay long. Basically, your fry pan bottom breakout with a doji sandwich. Stay long until you see a sell signal. And very, you want to stay long on this as long as it stays above the T line. ADIL, absolutely nothing there. I'd take my money out and move someplace else. Simple. This was a good illustration of a buy right smack dab off the 50, above the T line, wave 1, wave 2, wave 3 in progress. I wouldn't buy it here, but I'd buy it here knowing that it broke out through this level. Plug hasn't gotten started yet. I'd be more apt to buy. If you're long, you can stay long. I'd be a buyer when it breaks out through the $30 area. Beat, stay long. Wouldn't buy it here, but I'd stay long as it stays above the T line. Denny's, another kind of a J-hook pattern. Uptrend still in progress. QDEL, bullish engulfing off the 200. You could buy this one on positive trading. It needs a lot of needs some bullish confirmation. Needs to show some good strong buying. And SPWR probably would not be long or short this one. There's no direction to it. Tank, that one you can stay long. Sting, you stay long. Whoops. And Fro, you could be buying this one. Neat. Big J-hook pattern. If you're long, stay long. If you're looking to buy, put a buy stop just above that level. Kind of telling you your J-hook pattern did break out. After a big bullish left-right combo today, would you buy tomorrow anticipating it breaking the previous all-time high? Let's see, that was Twitter. Is that the all-time high? It's still not a real dynamic chart. Yeah, I'd probably be more apt to buy it after it comes up through that level. So, yes, I'd want to see a positive open and positive trading, which you're likely to get. That's what that big left-right combo kind of implied. And SLS, that one, yeah, that one you just happened to, or should have been lucky enough to get in. But that was your message right there, your indication. Notice how flat. So if you see something like that, that tells you there's a new dynamic. Go to your information or your news and see what caused that move. I'm sure they got approved on something. And Boeing, well, Shazam. Another one that it's in an uptrend. I wouldn't buy it here, but if I was long, stay long as it stays above the T line. Bullish Harami. Yes, but there's no direction to this. Yeah, there's nothing on that chart that can give you any good reason to be either long or short. Yeah, even if it did positive trading tomorrow, still nothing there that would really, yeah, it's just there's no trend to that chart. Yeah, or an easy way to say it, there's a lot better places to have your money. Billy, you stay long. There's the J-hook pattern, but now you got wave 1 and wave 3 getting pretty close. But as long as you are seeing bullish trading, you stay long. If I was long, I'd have my safety stop at today's open. If it came back down through there, that means this dark cloud is still taking effect. And Apple, not a good chart. You can see it's having trouble moving anywhere, and this is happening to all the biggies right now. There's really no great chart patterns in these stocks. Yeah, they've just been kind of sideways. Square, SQ. If you like this, you can stay long. Now, here was another case where it closed just below the T line. If I was confident, or if I would have said, all right, it needs to open and trade positive. It needs to close back up above the T line. Had it opened and started trading down, I would have closed it out because that would have told us we had a double top. The other one, QS, there was your fry pan bottom breakout. Just hotter than a $2 pistol. Whoops. Twist, all you can do is stay long. Now you're in the overbought area, so you put your safety stop at today's open. It's too risky to buy, yes. Kerry, that's the same analysis. It's already made it a move. So you shouldn't be buying here. You should be looking back and saying, where should I have been buying this one? And then find charts that look like that. Fossil, J-hook pattern still in progress. If this was a 6-point move, look for this to move up into about the $17 range. Myra, oh boy, you shouldn't be in this one, and you because it closed below the T line, closed again below the T line. You should have been out. If you had gone short, you get ready to cover this if it opens positive tomorrow. You can, if you want to buy it, you could buy this one on strength tomorrow. Silica, stay long, wave 1, wave 2, wave 3, but look at what's happening. Where do most people buy? They start buying exuberantly at the top. Have a safety stop in place, maybe the halfway point of that candle. And Arlo had a stick sandwich right here, coming out of this fry pan bottom. Right now you stay long as it stays above the T line. And RVP, you can get ready to start buying this J-hook pattern. Doji, 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 off the 34, back up through the T line. Wave 1, possibility of wave 3. Restoration Hardware, nah, that's nothing. Are we looking at the same one? No, you had a dark cloud and a gap down. Stochastic's coming down. You should be out of that one. Whoops, I didn't scroll fast enough. Pfizer, where's it trading tonight? I guess I could find out. Pfizer's trading up a little bit. All right. So it's trading up here. You could buy this one on positive trading tomorrow, but you're not, it's not a good place to be buying it. Shopify, nothing here to get excited about. I probably wouldn't pay attention to this one until they broke out through this level. OKTA. There's your whipsaw right here at the end of a fry pan bottom. Get ready to buy this one. Boy, get rid of that. Fry pan bottom, if they start whipsawing it here, get ready for the big price move. And STX, why is this happening? Why am I? Just stay long. Would not buy it here. I would just stay long. Etsy, another one you can get ready to buy if it trades positive. Kind of a stick sandwich. Get ready for the next move to the upside. The gold stocks are probably selling off because gold is selling off. You probably want to be short. Whoops, I can do this. Gold, yeah, it's not doing anything. Kind of weak right now. NNOX, yeah, it's a bullish engulfing, but it doesn't mean very much. It's probably a chart that if I was short, I would have covered the short when it came back up through that level. Probably wouldn't be long or short this one. There's nothing to kind of latch on to. Bed Bath & Beyond, nothing here yet. If you're short, get ready to cover the short position on positive trading tomorrow, but I wouldn't be going long. We did Apple. Do you have anything you can go short on? I would look to short this one on weakness with the expectation the first target down here, second target. Goose, you could go short. Look at your bearish flutter kicker. So here's, again, the logic built into candlestick analysis. If you're in an uptrend and they have enough force to gap it down below the previous day's low or open, close out immediately. Then, remember the doji rule. If it opens lower, it's trading lower. And there's your bearish flutter kicker signal, which is a kicker signal with the little flutter in here. It's more predictable because we know what should happen after a doji. If it opens lower, they're going to trade it lower. Now you've got kind of a blue ice failure, which means they failed up here at the 50. That was the ice they fell through. They failed to find the hole. Now they've drowned. Next likely target could be down here at the 200. Did we do SLS? Yeah, that's a toughie. You trade that one off your 10-minute chart. As far as the Dow, no, is that what you're considering, or you're thinking of Dow Chemical? No, the Dow did not, that's not a dark cloud. Remember where a dark cloud has to open. Has to open above the high of the previous day. What is a stick sandwich? This right here. Up move, big down move, big up move. Stick sandwich. Bernard, I don't know what that was referring to. That one is a whipsaw. You can get ready to buy on positive trading tomorrow. Fox, you stay long. It looked like it opened, yeah, opened and closed above where it opened. So put your safety stop at today's low. It shouldn't come back down through there if you own it. ADSK, not necessarily a buy. That one's in a 45 degree. You could buy it if you like it, but it wouldn't be my first choice. It's now just in that steady uptrend, what we call the 45 degree after that big move. The Zoom was having problems. If you're short, you stay short on this one. No, that's not a piercing signal. I don't think. It didn't open below the previous day's low. That's just an up day and a downtrend. That's not anything to get excited about either. You can buy it on positive trading if you want to, but here's your first target. Let's put it this way. I think there's probably better places to be. Oh, natural gas may be bottoming. Have to see if they can break up above the T-line tomorrow. But I definitely wouldn't be short if you were short. Taiwan, you just stay long. Oh, no, nah, that's just a pullback to the T-line. Quart, that one's more of a J-hook with a doji sandwich breakout. That should have more upside, yes. CrowdStrike, that one I would stay long, anticipating you're still in a 45 degree. How strong a signal is a stick sandwich? It usually just implies that there's going to be more upside. And the fact that it came out of a fry pan bottom, one of the aspects of a fry pan bottom is when they break out and the new enthusiasm comes in, sometimes you get this whipsaw, but it still implies there's going to be a breakout. I usually use the 10-minute chart as my bellwether. If I'm trading something during the day like soybeans, that's probably not a good example, but I'll trade off the 10-minute chart to see what happens on that. Let's find something better that might have been better trending today. Nah, that wasn't even good. Oh, this, I forgot to even do this one. This is why the oils are acting well. That's the crude oil 10-minute chart. Because of this. Crude oil picking back up. It's trading at the $47 area. Remember, it wasn't too long ago that you had to pay somebody to take your oil because there was no place to put it. Constellation Brands, I would be ready to go short on this one with the close below the T-line if this opens lower tomorrow. Pfizer looked like it was trading up here. That's not the best place to be buying it. So I probably would be going someplace else. How do you interpret a stick sandwich? It just tells you there's a lot of oscillation, whipsawing, but it takes out a lot of the decision. So took it up, profit taking, took it back up, tells you there's probably more upside to come. It's one of the 50 signals that you don't necessarily have to learn, but if you saw it, you want to recognize that it was a signal, and then you can go back to one of the reference books and check to see what it means. Do your books have information in them that isn't covered in here? If so, which of your books? Jake, I'd still start with the high profit candlestick signals and patterns. And then you're in here often enough that you know about the T-line, and but the bread and butter is that book. ARK, no, wouldn't buy. I'd hold. You're in the overbought area. You've already moved up 20%. You look back and say, well, I should have been buying maybe here at the fry pan bottom breakout. So instead of buying something that's already up in the overbought area, you go look for a chart that looks like this. Remember, there's 9,500 trading entities out there. You don't want to be buying the ones that have already had the big moves. This one, you get ready to buy if it opens positive tomorrow, because you'd have a fry pan bottom breakout through the 50. USO is the oil fund, which today broke out through the 200. So you want to stay long. And FLGT. You could probably still be buying this one because you're right here at the breakout level of a fry pan bottom. Tesla came back up through the T-line today. You stay long, but you don't want to see it close back below the T-line. Riot, another one that if you didn't close it out yesterday, it had to close back up above the T-line, but it has to open positive. You don't want to see this one open lower and trade lower. And the S&P right here indecisively at the T-line. So makes the analysis very simple. If the pre-market futures are showing the markets are going to open positive, you're still in an uptrend. If it opens lower, there's still the profit taking going on. I think we did Chewy, didn't we? Yeah, that's not quite a stick sandwich. A stick sandwich is usually big trading ranges. That was just profit taking yesterday and coming back up. I think we saw that same. Yeah, you wouldn't call these stick sandwich. Well, that's more of a stick sandwich, implying that if this opens positive, there's going to be more upside. And CYTK, boy, it's supported on the 200. If you're long, don't let it trade back below the 200 or today's low. It needs to open positive and trade positive. All right, so tomorrow will be important because you're sitting right here on the T-line on the Dow. So you want to see it trade positive, but that still doesn't, that means you want to be a little bit more attentive if it opens lower, that some of your strong charts are still going to act strong. So obviously the oils are acting strong because oil is working well. But if it kind of gapped up, moving far away from the T-line, after about a 35% move, you might think about taking some profits on the first signs of selling. All right, with that, everybody have a good evening. Remember, Saturday is going to be an all-day with Metastock. I think Becky had put the link in earlier. But it's a good place to get a good broad view of different trading strategies to see which one's the best one for you to use. And the reason we advocate looking at different trading strategies, if you put candlesticks on your charts, it enhances what they're trying to convey. So with that, everybody have a good evening. We will see you bright and early tomorrow in the chat rooms. We'll see you then.